Hey everyone, welcome. It is 1 p.m. on April 4th. Thank you for your patience while I was away for a couple days. I'm feeling much better, but I was hoping to take it easy on this particular video. I'm still recovering, but the market had other plans for me, I guess. It was quite a day to come back. You can see that we had a huge movement on the SPY, actually in all the indices. We were on track to do very well to continue this movement upwards, but during the day we had this sudden and sharp sell-off, and it's with conviction. There's plenty of long bars. They're all in a row. They kept on moving down all the way to into the close of the session. So we want to examine this. I'm sure the question on everyone's mind is why? Why did this happen? Normally, my answer to that type of question is it doesn't matter. All that matters is that it happened and what do we do from there. But, I know that people are curious. So I will attempt to answer why. But more importantly, I will answer what to do about it. So we can see that this drop off started a little bit before 11. It started to curve downwards, and then we started to get this sharper and sharper move downwards. If you look around on news websites, for example, CNBC, there's nothing really there. It just says, oh, Dow fell. Nothing weird, nothing really standing out in terms of headlines. If I look on finance.yahoo.com, it just said Fed speak. So they're saying, oh, maybe it's the Feds. Kashkari is saying that, hey, maybe we're not going to cut rates at all in 2024. And then if we look over here, maybe Bloomberg, Mester, we've got Mester, another Fed speaker. We've got this tiny blurb on Biden telling Israel that the US support hinges on protecting civilians. And then if we look on Benzinga, it's just hawkish Fed voices. So most of these news services, if they say anything, they seem to be attributing it to Fed speak. My question to them would be, when have we ever seen any of these speakers that were not Powell at all? And most of these people, we probably don't even know their names. And when have they ever moved the market? And the answer is never. Right? Kashkari has been very vocal. Kashkari, actually, incidentally, I used to sit next to him at PIMCO. he used to be about 10 feet away from me. But Goolsby, Mester, we see these names every once in a while. You never really know any of these other names. So would a Kashkari or Mester, would they be able to move the market like this? And the answer is no. They're not the reason for this sell-off. Maybe if we had only gone down at one or at most two levels, then we could say, hey, it was probably these Fed speakers. Not only that, they didn't start speaking until about 11 o'clock. 9:15 for Barkin, 9:45 for Goolsby. No one, I'm sure, was really paying attention to them. But Mester and Kashkari, they didn't start speaking till 11 o'clock. So to say that this was caused by Fed speak, I believe that is ridiculous. If we look at the Fed Watch tool, we see that the chances of a May rate cut are actually up. Or wait, this is rate cut. Yeah, it's up. So we would expect it to go down, right? If Kashkari says that we're going to get zero rate cuts this year, or there's a chance that we're going to get zero rate cuts this year, that's what I've been saying. But if Kashkari says it and the bond market is listening, this should have gone down, not up. If we look at June, We've got 70% baked in right here. Yesterday, we were only at 62%. So today, according to the bond market, there's even higher chance that we're going to get a rate cut. So the bond market is not responding as if it was all of this Fed speak. That's a little bit of BS. TLT, if we look at TLT, we popped up and we are actually up from the close just barely, but we are up from the close and we're back in this triangle region. So this is an example, once again, of the media just making stuff up. We saw a phenomena happen in the market, and all of these news outlets, they have to try to explain it because they're trying to sell their news, and they just make stuff up that kind of sort of sounds good and kind of sort of is believable. But when we examine it carefully, it all falls apart. So this movement absolutely was not because of the Fed speakers. So there has to be something else. So when we look around, if I go and I look at my sectors, and I'm going to see what changed today. TLT is up, ITA was up. That's interesting. So aerospace and defense. And then the next best is energy. It did not fall as much. When I see defense sector and energy at the top of the list, the first thing that comes to mind is geopolitical risk. Is there war, or is there threat of war? We already know there's stuff going on in Ukraine. We already know there's stuff going on in Israel, Palestine. So did something happen over there? This is a big clue right here. Defense industries, and meaning weapons, basically war industries, and energy, oil. Oil is really big when we come to when it comes to war. So XLE, even though it might be down, what I need to look at specifically is oil, which I do not have in this list. So if I look at oil, suddenly I see that oil is up quite a bit, almost as much as the S&P was down in terms of the size of that bar. So if I overlay this and I put in USO, what do I find? As this is moving down parabolically, this is moving up parabolically, got a tiny bounce right here, we got a larger bounce right here, then we peaked out on oil and then we went flat, but the S&P kept on moving downwards. So a huge part of this is oil, okay? So now I've got oil and defensive sectors. This is ITA. So ITA was moving down with the S&P 500, but it started to recover, bounced back up, and so it did end up on the day. So there's still a gain. So this is looking geopolitical. So now we need to go back. The only thing that we saw was that little blurb about Biden. That was, is that on CNBC? Nope, Bloomberg. Yeah, okay. So Biden's saying something to Netanyahu about contingencies for continued US support. So if the US stops supporting Israel, is that going to move the market? Maybe a little bit, but not that much. So there's got to be something else going on. So, and it's just not popping up in the news. So this is when we need to rely, because information will hit the news later. If institutions are selling, they're just going to take action based on something that they heard or something that they not necessarily even verified yet. And then they might talk amongst themselves, and then we might get a clue on the news. if we look at some other defense, like Lockheed Martin, you can see that it popped up. And if we look at, does Raytheon still exist? Raytheon? No, they're out. Okay. Let's see how Boeing did, just out of curiosity. Nope, down a little bit. But we have the defensive stocks up. So basically, we need to have our ear to institutions. So I reached out to a couple of people, institutional traders that I still know. And the word is that we have fears for the Middle East. So what happened over the last few days was that there was an Israeli airstrike. This is actually what that Bloomberg article is about. He's saying that there was a strike that killed aid workers. The Israelis were the ones who dropped a bomb on them. And the Israelis are saying that it was an accident, but the aid workers, the organization those aid workers work for, said, we were in constant communication. We told you guys exactly where we were, exactly where we were headed. So they don't believe that the strike was an accident. They believe that was intentional. And so we've got Biden saying, hey, you can't do that kind of stuff, and we're not going to support you if you keep on doing it. But you have even more, you have the Muslim world really pissed off now. You've got starting to break ties with Israel, which it was a huge thing several years ago. I believe it was during Trump's time. He helped negotiate the Israelis and the UAE for the first time in history for them to have official ties. So now that is being threatened. And then you have the Iranians threatening to attack Israel in retaliation. So that's what is causing this drop off, not the Feds. Yeah? So that said, now that we know, or we have a very good idea of the reason why this sold off, this type of news tends to blow over, meaning that there is a huge reaction when it first comes out, but after a couple of days, the reaction is over. So usually, by far, most of the time, what happens is we either bounce really hard back and kind of undo the fear trade. So we bounce right back up to all-time highs within a week. Or the fears seem to be founded and we keep on falling. What basically never happens is that we stay right here and do nothing and chop sideways. So for the next few days to 1 week, we are almost very certainly going to be very directional. The interesting thing here is that that bit of news broke our trend. In the S&P, it's the first time that this has happened in about a year to year and a half. In the QQQ, it broke our, did it break our MA50 is 435.79. We closed at 435.34. So we did technically break our MA50, but we're very close to that level. So is it really a real break? It could very easily just move right back up tomorrow. In our Dow Jones, we broke our MA50 with conviction. And now we're at a horizontal support, where we've seen about two or three other times where we've been at this level. So again, it could bounce back up, but then the MA50 in the case of the Dow Jones would act as a bit of resistance, whereas in the QQQ, we can't really say that because it closed, not significantly under that MA50. And if we look at small cap stocks, we actually doesn't look too bad. Actually, it just closed at 203.77 the day before we opened at 203.38, so it didn't even poke below that line right there, and we're not quite at the MA50. So by far, the worst one is Dow Jones. QQQ is looking okay if it can hold that MA50, and the SPY did break its EMA 20, and we are now kind of in between the MA50 and EMA 20. The EMA 20 does look like, let me remove some stuff here. Yeah, it does look like it could act as a resistance tomorrow. All right. So what is almost guaranteed is that we are going to be very directional for the next few days. We just don't know which direction. If I look at the VIX, VIX did pop up to about 16 and a half. Looks like maybe as high as 17 today. But I told you, I don't remember how many days ago, right before I got my sore throat, what I told you is that if we hit the 18 to 20 region, then we would start being very wary of a break of that uptrend and a creation potentially of a new downtrend. So with all that huge sell-off today in the S&P, remember the VIX is specifically on the S&P. So this huge sell-off, we were very close to all-time highs, and we sold all the way down below the EMA 20. That's a huge movement for a single day. And with all of that, we only spiked up to 617 in our VIX. So that gives me a little bit more confidence that we may not just fall rapidly. So maybe a tiny bias towards moving up instead of moving down. The good news is that for the S&P at least, if we did continue to move downwards, we seem to be limited by the MA50. It is likely that we would at the very least pause at the MA50 before we move downwards. So this bar is large compared to, let's see, basically every bar we see here. Okay, so it's the largest bar we've seen since this uptrend began. The volume bar, at least so far, is not. So we've got 93.76 million in volume today. After we add in dark pool and whatnot, we may add another 10 to 15. With today's trading action and the large sell-off, maybe we'll add 20, okay? 20 to 25. So let's just say we added 25. That would bring us to be roughly 120 million. Let me see what some of these other bars are. So that's 126 million. This was 140 million. So it's definitely a large bar, but not the largest in terms of volume. What we would want to see in order to have downward conviction and say that this is a break, a definitive break, is that we keep moving downward tomorrow, and then maybe the day after, I guess that would be Monday, we break the MA50. In any case, there's a lot of risk because we have that weekend, and anything could happen over the weekend as well. So we're at a high risk point in the market, just very suddenly in a single day. I was looking at the fear and greed index, and that was really interesting because very suddenly we're at neutral, 49, whereas yesterday we were still here in the greed region. And a week ago, it says 71, but at some point a week to 2 weeks ago, we were actually in this extreme greed region. So money definitely moved around today and really brought this down quite a bit. However, this is not reflected this same way in the VIX. The VIX is still over here below 17. It traded as high as 17, but we didn't get to these extreme levels yet. If we start seeing VIX hang out here and go higher over the next week, then that would be correlated with a strong break of trend, and we'll probably keep on moving downwards. Okay. So now that we know kind of what happened, or we have a pretty good idea of what happened and why it happened, okay, we don't have a great idea of the direction. We have a small, tiny bias to the upside versus the downside. We basically have to decide what to do with our positions, because this trend has been intact, and normally we don't necessarily break so hard with such a huge bar and so suddenly. So we were counting on it being a little bit more orderly if this is going to break down. But sometimes news happens, and that's the excuse, and people start selling or panicking, and then people pile on, and all of a sudden we're in a downtrend. So we've got the heightened risk right now of this potentially turning into a run, and institutions and retail traders all dumping right now, which would be okay for the market makers. But right now, it's looking like we can't give it too much conviction. What we want to do now is we have two opportunities here. We can either hedge ourselves, because this has we've been positioning our portfolios upwards, because this has been a very strong uptrend, and now we have a potential break. Doesn't mean that we've broken. We have a potential break, just like right here, just baby went down below the EMA 20 and went back up. This is a little bit more significantly below the EMA 20, but we've seen things like that happen. For example, in QQQ, we broke well into the region between the MA 50 and EMA 20, and we went back up. And same with right here, we went back up. Here we're at the MA 50, and that is a pretty good place for it to bounce and go back up. So I'm going to be interested in seeing how QQQ reacted in the last bit, still downward movement. Let's look at some of the tech giants like NVIDIA. And nope, continued moving downwards. Microsoft, Netflix, Amazon, Google, Apple. Okay, we pretty much all of the tech ended on the lows. So that's doesn't give us any reason to favor a bounce off of the MA 50. So we're still kind of 50-50 on it. But it isn't okay. We could come in with support. I wish I had my level 4 access, but I stopped paying for that when I stopped day trading. But that would tell us, right, if we had orders over here to support and move it upwards. But for now, we'll just play it as about 50-50. So we can hedge. The other thing that we can do is, since we are expecting to get really directional over the next week, for 1 week, we can put on a strangle. A strangle is when we buy a call and a put at the same time. So if I go to option strat and I go, just say to, yeah, we can use QQQ, why not? If I say 5 days out, 1 week out, we buy both a put and a call. Right now, the market's sitting at 435. So if we buy the put and a call 435, then what happens is, well, by expiration, it's got to move either above 442 or below 427 for me to begin to make money. So we'll take a look. Where's 442? Where's 427? and 442, 427. Okay, let me make these thicker. So if we bounce off this MA50, it seems like it's pretty good chance that we could cross this 442. We could start to challenge or overcome the previous all-time high. So that is kind of an okay trade. If we fall and we break the MA50, where is support? Support is pretty much at that 427. The closest one is actually probably a little bit below that, around 425. And then we've got support at 413, and then we've got support at 395. So if it moves, there's a pretty good chance that it'll move below 427. So this seems like a pretty good trade. However, to make it even better, we say, well, what if we don't wait all the way to expiration? I don't want to wait to expiration because I don't want this giant region where it could stay and I lose money. Remember that when we have these large news events like this, it's very rare for us to chop around. Most likely we're going to get directional. But what if we do? Or what if it doesn't move quite as much? So what we can do is just don't hold it to expiration. Hold it till tomorrow. Forget about the weekend. If I hold it only till, say, 12:30 tomorrow, half an hour before the market closes, as long as it moves beyond 4:30 or 4:30, let's call it 4:39, then I will make money. So if I say this is 4:39 and this was 4:30, I believe, 4:30 and a half. Okay, so tomorrow, could we break below 4:30 and a half or above 4:39? The answer is pretty good chance given the extreme action that we saw today. That extreme action will probably generate an extreme movement the following day, some follow through. We're unlikely, because it's geopolitical, we're unlikely to just get chopped around. So this is actually a pretty good trade. So I'm just going to add this as a example trade. Post market April 4th. And we'll see how that one does. We'll visit it tomorrow. We'll visit on Monday, Tuesday. Most likely we're not going to hold it, or we wouldn't, if it was a real trade, we would want to close it early and not hold it all the way to expiration, unless it just moves so much and so fast and so directionally, in which case what would happen is, just say it bounced and it just started screaming upwards, then we would actually sell our put. And then it wouldn't be dragging down our performance anymore. So, and the opposite is true. If we just started dropping like a stone, then we would just sell the call and then make up all the profits with the movement in the put. So we are, again, most likely to get very directional and not chop sideways. So that's why we would be adopting those particular strategies. So now that's putting on a new position. The other thing we talked about was creating a hedge. So you may be, for example, in my position, if you're in my Millionaires program, is we just added on some new trades. We got out of position today, which was great, very fortunate. We tried to get out of another one and we came 10 cents away from getting out of it before the market turned around and started moving downwards. And so unfortunately, we're still in that position and we added a new position. So what do we do? Because for positions that were looking very good just a day ago, very suddenly they're experiencing losses. And they're not percentage-wise, they're not tiny losses. It's pretty significant just because of the speed in a single day, how much it moved. And we were talking about how the next week is likely to be very directional. So if it continues to move in the same direction with speed, then the value is going to continue to drop quite rapidly. This is why we want a hedge. Probably a month or so ago, we went very deep into hedges. There were several of these videos dedicated on how to find a hedge, how to calculate it, how to size it, how to make it appropriate for your current portfolio. So I'm not going to go deep into that today. Just going to remind you that if you're in that position, don't worry about it. First of all, your position sizing in your portfolio should have been such that with a large move downwards is not going to destroy your portfolio. So for us in the Millionaires Program, it doesn't destroy our portfolio. In fact, we are still up versus last week after today's movement downwards. So we are position sized appropriately. Now, if this continues to move against us and downwards, then we will not still be up versus last week. We will then be down versus last week. So we want to hedge. The way that we're going to do that is the delta hedging. So if you need a review, go back and find the videos where I talked about beta weighted hedging and delta hedging. Same thing. Beta weighted hedging and delta hedging are just different names for the same way of hedging. So just go back and take a look at those. And if you're in my Millionaires Program, just expect that I'm going to be spending some time today looking at everything very carefully and coming up with appropriate hedges for the portfolio. And what you want to look for is, for example, you should be pointed to the upside because this was an uptrend and that was just broken today. That's not a great, okay, that was just broken today. So there is the potential for it to come back up because of the nature of the reason why it broke below. We could come surging back up, in which case the trend is still intact and this is just noise, or we continue to move downwards and this is a break of trend and the start, most likely the start of a new trend. So what we want to do is to have a hedge that doesn't lose very much money or is capped out on how much it lose versus the gain that we would experience or the recovery that we would experience should the market move back upwards over the next week. But if it continues to move down, especially with conviction, that hedge will make up for all of the losses, or at least a large percentage of the losses of our current positions if they continue to move downwards. So that's how we want to think about those hedges. So I will be definitely spending my time looking at that very carefully and constructing the hedges for my own portfolios. And I suggest that you guys do the same thing. So hopefully I explained everything very methodically and very clearly, that you understood everything. If you have any questions, feel free to shoot me an email and I'll be more than happy to respond and answer any questions that you have. So no need to panic. This was, although an unexpected move and quite a large move, if you sized appropriately in your portfolio, then you're fine. And then now we have time to put on a hedge and just protect ourselves in case the direction happens to be continuing to move downwards. We do have a tiny, tiny bias or favor towards moving upwards, but really it's not enough to hang your investments on. So we really do want to put in a hedge or put on a strangle similar to the one that I showed you a few minutes ago. All right, guys, I hope everything was clear and that I was able to clarify what happened, alleviate any fears. Everything is just fine in terms of portfolios. If you're following me, any of the portfolios that we have, and we'll just handle it with professionalism going forward. I will see you guys tomorrow morning. Have a wonderful rest of your day. and we'll see what tomorrow brings.